Good morning, traders. Paul here with GammaEdge. Today is Wednesday, the 1st of June. Go ahead, pause your players. Please read this. It's important to you. It's important to us. Starting with the market model, constructive, 52-week new high, new lows. We're starting to see better breadth across the board. This is constructive to the bulls. This is good. Virtually no institutional or sweep orders went in yesterday. You can see that we bounced back and forth across the zero line, so no real directionality from the larger trades. Contrast this with the previous 2 days, which had linear up and some pretty significant net buying across the board. Taking a look down here, the flatness of the white cumulative tick here basically shows us no directionality whatsoever. And when we see this, it's either a consolidation day or potentially profit taking and people reloading for either a downside move or perhaps an upside move. And we'll talk a little bit more about that. We'll note the tightening of the ribbon. We're up in the ribbon. We have positive slopes now on the red line, which means effectively the short moving averages are now trending upwards, whereas the cyan, the longer moving averages are down. This is still net bearish, but it's improving, and we want to watch this because we need a continuation pattern, much like what we see here, for this to take off and break the upper cyan line. If we see that, we have more confirmation, and historically the testing shows that when we clear this, we enter another phase where potentially we could move into a longer term bull or not. But clearly we need to break above this in order to have a continuation of the bull, and we will look for that today. Taking a look at the overall index conditions, important to note that we're seeing almost across the board puts going in, calls coming out. There is an exception here with the SPX. I'll note though that the highest call gamma has dropped from 4,700 to 4,200. Why that's important for us in the big picture is that calls are coming in closer to where we are in spot price. And when we see that, it's a short-term bias, not a long-term bias. And so this sets us up for a short-term game, not necessarily the longer-term bull play. We want to pay attention to this. Taking a look at the SPY, you can see that we went from 414 to 420. This is actually good, even though we had some short-term gamma come out of the structure. This does suggest a little bit longer-term calls are going into the SPY. Really a mixed picture here. I know it can be somewhat confusing, but just take a look here, draw your own inferences. But remember, gamma is a short-term phenomenon. So these wing charts are showing a short-term behavior compared to the dominant levels that you're seeing within the overall structure. The way we play this is knowing that downside protection is being loaded. We want to watch that. We're also in a net negative gamma condition. You can tell that by the relative magnitude of the red wing to the green wing. And when we see that, we expect a little higher volatility. We expect a little bit of chop back and forth. And with the prices very, very close to the zeros that you see here, we expect some back and forth motion. So SPX, SPY, Qs, and IWM across the board showing some increase on the downside protection and some profit taking or reduction in the upside here. Taking a look at the near-term expiries, I'd say they're mixed. I say they're mixed because we have a positive expiry showing here on the SPX. We have a net negative on the SPY, positive on the Qs, negative on IWM, but the magnitudes are very, very low on IWM, so we have a large discounting mechanism going on here. I'll note that this is a fairly weak level. The black dot signifies where we are relative to where we are in the overall expiry for today. Cash settled, not a lot of pressure. The closer to the zero we are, which is currently at 40.80 or in that zone, really the fact of the matter is we're not going to see a lot of pressure from the 0 DTE unless this changes, right? We need to have a pretty aggressive push higher in order to change the moneyness of this equation, and we don't anticipate that today. Looking at the SPY, fairly significant double level here at 413 and 414. We are in the money, so these puts are in the money. These are expiring today. This could have a significant impact. Just be aware that there are two trajectories here. One of the trajectories is that we gradually come up above the zero here at 414 today, and we drift upward to that 415 area, which these will be out of the money and will be in this kind of suspended state. If we continue to drop throughout the day below 413, the moneyness here increases. When the moneyness increases, there's going to be increasing pressure for monetization because the SPY, the Qs, and the IWM are all equity settled. And so folks will take their profits as the moneyness changes as we go south, and that actually will cause a price upward if you're on the put side of the equation here. So we'll want to watch that. Also note, we've got a lot of calls here today. When those are closed out of the money, that will actually show some downside pressure. So we've got a balancing act going on between the overall system. The zero here is 414. We want to watch that today. Qs, you can see where the zero is at 303. We have a major level up here at 310. Moneyness is really, really light. Not seeing a lot of action from the 0 DTE here. And then IWMs, like I said, very, very small ranges here. Kind of blows up these bars because it's auto ranging. Not seeing a lot of pressure one way or the other here. You can see that we do have these back and forth in transitions. This is characteristic of a very, very low structure in terms of the IWM 0 DTE. We're not expecting a lot of fireworks either way on this. So mixed setups across the board on the 0 DTEs. Taking a look at the gamma history, I've got some text here to give you context if you're not used to looking at these charts. Ask that you read these. Might solve some of your questions. I do want to call out a couple things here. When we see negative gamma coming up, it's to take advantage of a short-term drop. But when we see positive gamma dropping to the top of the price structure, it's to take advantage of a move up. So we're at a mixed crossroads here where there is really a battle going on. Folks are anticipating a move up and so have brought the calls in. Folks are anticipating a drop and have brought the puts in. And when we have a tightening of this range, we expect a break one way or the other. Note that the 0 gex line has moved up. Excuse me. When we see the 0 gex moving up, it's the bulls are winning here, and so there is an anticipation that more calls went in compared to the puts, and we'll want to watch that on the short term. The Qs are very, very interesting. Note how tight we are here. I've got some descriptions over here for you to look at. IWM, again, very weak. We are seeing negative gex come up. This is the dominant negative gamma level. When we see this come up, typically it's to take advantage of a short-term drop. We're not seeing a real change in any of the other structures here, so the market is anticipating a potential drop here. Flow summary is kind of mixed. I've drawn some arrows. You can see calls were added. This should be green, by the way. Sorry about that. This one should be green, and then we had the as they were monetized throughout the day, that would be a downward short-term bias. As puts were added here, obviously short-term, the overall feel here is that we have a net negative in the next 30 days. So in terms of expiries, the next 30 days we walk away from the SPY saying net negative. Now, that being said, beyond 30 days, we had a large transaction come in midday, which added a lot of puts here, a lot of put premium coming in, very significant levels here. And then it remained fairly steady, maybe some little monetization that we see here in the overall curvature. Why this is important is that the overall feel for this and the dropping of the calls here at the beginning and then remaining flat do indicate that on a longer term basis out beyond 30 days the overall feeling is downward for the SPY, and so people are protecting for the downside. Qs, we are watching the calls being monetized early in the day and then relatively flat for the balance of the day. We're seeing some puts being monetized, that's why this is green, and then relatively flat with just a slight uptick into the bottom of the day or into the end of the day. Overall net on the shorter term, I would consider this more or less flat, maybe a little negative. And you can see that down here, just the dominance of the red. But in general, we are seeing some call taking that does suggest that perhaps a short-term local top is being anticipated in the next 30 days. Beyond the 30 days is very interesting. A lot of green, and what that comes from is that early in the day we had some calls that were added out beyond the 30 days, a lot of premium coming in here and then riding up into the euro close and then relatively flat into the afternoon session. Puts were flat. When we see something like this is a longer term bet on technology on the Qs, and we want to definitely watch this. The Qs and SPY are often correlated. They are not correlated right now, and we want to pay attention to that. IWM, like I said, the scale is just, there's no transactions going on in small caps, and so we get a lot of noise here. You can see on the short term, net yesterday was positive on the less than 30 days expiry. Beyond 30 days expiry, net negative. Not reading a lot into this, and this has been the story for several weeks with IWM. Taking a look at what we call the true gamma and delta zeros, we are above where I call a critical support level. If we lose this 4065, 4066 area, we want to pay attention to that. That'll open up the downside here to 4,000. I do think we'll remain in this area. Potentially pushing upwards towards the 4200, which is the short-term positive gamma for the SPX. I want everyone to pay attention to this. At the end of June, we have this 4285 level. There's 44,100 contracts sitting out there that are due to come off. That's on the put side. As we move up through this, the moneyness changes there, the deltas change there, and the hedging requirements from the dealers is very, very significant, much larger than what we saw yesterday. To the downside, you can see kind of the double stack here at 3905 and 3910, but these are out in August and July, so we don't have to worry so much about them. So your takeaways are below 4066 or so. Watch for 4,000 to open up, and we could continue to grind upwards towards 4,200. I do think 4,200 is an absolute ceiling in the short term, with 4285 just due to some of the structures we're seeing being out of reach in the near term. 0 DTE today, basically positive expiry, relative normal magnitude in what's coming off. 4,200, you can see right here, the ranges are defined by the blue. What's key here is that we're 4,100 to the downside's net negative gamma. You can see a lot of positive deltas here. It's going to be very, very hard to move down through this area. You can see that we're turning positive deltas to the upside also. Still a lot to plow through. 4,200, as I said, within range, certainly within range. From a 0 DTE perspective, not expecting that we're going to push aggressively there. If we do, always got to be prepared for that. I don't think we go much higher than 42.25. I'm not expecting that. I don't think, because of all these transitions, I don't think we're going to aggressively move up in this area. I note circle 5 is the dominant negative expiry for today. Again, this corresponds very, very closely here with where we have the net negative gamma. Very difficult to push south of this, but again, if we do, remember I said that 4065, 4070 level on the previous slide, in combination with what you see here, could be the downside areas of support. Taking a look at the combo, which is the AM and the PM settled. I know a lot of information on here. A couple things to really pay attention here. First of all, net negative, it's not really going down. We haven't seen, relative to yesterday, we didn't see a huge drop here. So we're kind of locked in. We'll have to see how we progress here. A lot of positive gamma above where we settled. The JPM roll yesterday at 41.35 took a lot of this away, and so now we've got some smooth sailing to the upside in terms of positive gammas. Note all this negative delta up here. This is above the 41.65, 41.70. I think it's going to be hard to push aggressively higher until we start seeing more calls being added. We get the negative deltas here by the way we do our construct, and basically we have more puts in the structure above us than we have calls. So just be aware of that. That being said, as we start flipping these more and more to green, we open the door to moving higher. So keep an eye on this on a day-over-day basis. 4,200 is where it is. This is the June JPM that I was just talking about earlier. Out of range, which is indicated by the blue horizontal lines. You can see to the upside, got a lot of resistance. To the downside, 4,000. We've got COI, POI here, so unlikely to break below that, especially with all this positive delta that we have down here. Note, of course, though, that we have some key levels here to pay attention to, and they are on the half levels. So just keep those in mind as you look at the structure throughout the day. Expiration, largest expiry until monthly. You can see that we're positive. Very noisy. You can also see the Tuesday, Thursdays are virtually nothing here. So I think that's fairly important for us to watch. Watch the monthly. It seems to be growing in negative magnitude here. That's the downside puts being added. And then the end of month is already starting to show up and become a discussion topic. And we're going to want to pay attention to that because that's where JPM typically rocks the market a little bit. Taking a look finally here at the overall structure, we have a emergence of a new transition zone. We do have positive gamma above us. You can see that 4200 is the upside target. We're here at 4132. Downside looks pretty clean to the red side. You can see they're becoming more balanced. That just goes with calls being added and puts being closed. We haven't really moved much relative to where we were yesterday. Note that 4285 level here. So if we can get above 4200, that we have another pinning level up in this area, transition. That'll be where dealer hedging will have to shift, and we'll just have to pay attention to that. This is a little bit more problematic. This needs to clear before we can aggressively move up, and just the emergence of this, I think, is telling that we may have a long-term overhead ceiling developing as people either close their calls as we move up, exposing the puts that we see here. Negative gamma, or as spreads are put on, wider spreads are put on, as it's showing the negative side up here. So we could see some selling of premium up here, which is causing this emergence. So what's the summary for today? The too long didn't read, caution. Yesterday was a pause. If you remember the cumulative tick, it was not constructive to the bull case, and so we want to pay attention to that. The GammaEdge market model on the longer term, it is improving. Cumulative tick is improving. We're getting this mixed picture in the red ribbon moving averages compared to the cyan, but just note we're in the middle of that range, and when we're in the middle of that range, it can break either way. Shorter term, breadth is supportive for the bulls. It needs to continue. And we need to push through that ribbon. If we don't push through that ribbon, then the writing's on the wall and we should be playing the downside. The wing charts are showing a notable addition of puts, reduction of calls. Be aware of that. Doubtful we're going to push above the 4200 level. Zero DTE, if something happens today, I have no idea what it could be, but if zero DTE pushes us up over 4200, we could see the 4225. I do not expect this, just not in my plans for today. And I do think to the downside, the loss of the 4066, which I think that whole area above that, 4100 down to 4066, is going to be a support area. But if we do lose that lower 4066, I would play downside to the retest of 4000. So that's it for today. If you like today's content, please come and join us at GammaEdge.us. That'll take you to a sign-up page in the Discord. Once you're there, you'll get 14-day free trial, no risk to you. All the tools turned on. A lot of good content there. A lot of good traders. Come on in and see how you can overlay this with your trading style. On Twitter, please follow us at GammaEdges with an S, and then here on YouTube. Please, if you liked today's content, please hit that like button and then subscribe. It helps us in the search engines and helps other people find us a little bit easier. So with that, I bid you farewell. Have a great Wednesday. It is hump day of a short week, so that's a good thing. Thanks for listening if you made it this far, and we'll see you in the Discord, and good luck.